As of right now, there could be 2 rate hikes before the end of the year. So here's what could happen to mortgage rates if the Federal Reserve decides to raise interest rates heading into 2027. So as you can see, the odds of a rate hike in this month are pretty much zero. Going into September, it's a little under 50%, but then you get to October and December where you start to get closer to a 70% chance that the Fed is going to hike rates. Now, the short answer on what mortgage rates could do if the Fed decides to raise their base interest rates is potentially nothing. The Fed's interest rate decision doesn't necessarily have a direct impact on mortgage rates. However, it can impact it. You see, as of right now, the market is pricing in rate hikes. So mortgage rates are already elevated because of that. Now, the 10-year Treasury has a more direct impact on mortgage rates, and I'll show you this based off some historical data. So leading into 2025, the Fed actually cut interest rates by a full percentage point, and that actually caused mortgage rates to go up. You see, this was the 10-year Treasury yield in September 2024, sitting at 3.6%. And after the Fed did their full percentage point of cutting rates, the 10-year Treasury yield actually skyrocketed to 4.8% in January of 2025. And if you want to take a guess what mortgage rates did, you see they were 6.1% in October 2024, and then they went to 7% in January of 2025. So keep in mind, the Federal Reserve cut rates by 1%, and mortgage rates went up by 1%. And that is because of the 10-year Treasury yields outcome based on economic data. So during this period of time, we actually saw the unemployment rate going down and inflation going up. And that had a larger impact on the 10-year Treasury yield, which in turn had a larger impact on mortgage rates. So although we have rate hikes potentially on the table this year, it actually might not have an impact on mortgage rates. In fact, the last time the Fed cut, mortgage rates actually went up. So potentially we even see this opposite correlation. Now, whether or not this will happen again, I don't know, but keep in mind that economic data can oftentimes swing mortgage rates to one direction or another, more so than the Fed actually going through with its rate hike or rate cut decision. Let me know your thoughts in the comments. Follow me for more.